You are 70 years old. Your grandchildren are the light of your life. You want to leave them something, even if it is just enough to cover your funeral, so they do not have to. You call an insurance agent. They offer you a $10,000 policy for $200 a month. You do the math. In 5 years, you will have paid $12,000 in premiums for a $10,000 death benefit. That is not insurance. That is a reverse lottery. You are paying more than your family will ever get. And yet, thousands of seniors sign up for these policies every day because they think it is their last chance. They are wrong. There are better options. But you have to know where to look. By the end of this video, you will understand exactly what life insurance options exist for seniors over 70, how to avoid the predatory policies that drain your savings, and the 3 legitimate products that actually make sense. I will break down the difference between term life, whole life, guaranteed issue, and final expense insurance. You will learn the 2 critical numbers you need to know before you buy, and the simple question that will expose a bad policy in seconds. If you are over 70, or if you have a parent over 70, this video could save you thousands of dollars. Let me start with the most important fact about life insurance for seniors. After age 70, traditional term life insurance becomes very expensive or unavailable. Most term policies have maximum issue ages of 65 to 70. A few go to 80, but the premiums are astronomical. A 70-year-old male non-smoker might pay over $500 per month for a 10-year term policy of $100,000. That is $6,000 per year for 10 years. That is $60,000 in premiums to get a $100,000 death benefit. That is a terrible deal. But many seniors are sold these policies anyway because they do not know any better. So what are the real options for seniors over 70? There are 3 main types: final expense insurance, guaranteed issue life insurance, and simplified issue life insurance. None of them are great, but one of them is far less terrible than the others. Final expense insurance is the most common product for seniors. It is a small whole life policy, typically $2,000 to $25,000, designed to cover funeral costs. The premiums are level and never increase. The death benefit is guaranteed as long as you pay. The underwriting is simplified. You answer a few health questions, but no medical exam. For a 70-year-old non-smoker in good health, a $10,000 final expense policy might cost $50 to $70 per month. That is not cheap, but it is not a scam. Over 10 years, you would pay $6,000 to $8,000 for a $10,000 benefit. That is a reasonable trade-off if you live longer. The problem is that many seniors are sold final expense policies with hidden fees and long waiting periods, which brings me to guaranteed issue life insurance. This is the product that preys on seniors. There are no health questions. Anyone can qualify, even if you have terminal cancer. But there is a 2 to 3 year waiting period. If you die in the first 2 or 3 years, your beneficiaries get nothing except a refund of your premiums plus interest, not the death benefit. The premiums are also much higher. A 75-year-old might pay $150 per month for a $10,000 guaranteed issue policy. If you live past the waiting period, your family gets the death benefit. But if you have any health issues, the waiting period is a huge risk. Most financial advisors recommend avoiding guaranteed issue policies unless you have been declined by every other carrier. Simplified issue life insurance falls in between. You answer a short health questionnaire, but no exam. The premiums are lower than guaranteed issue, but higher than fully underwritten. For a 70-year-old in fair health, simplified issue can be a good middle ground. Approval is fast, often within a week. but the death benefit is usually capped at $50,000 or less. Now here is the pattern interrupt that most people do not know. There is a hidden option that is better than all of these. If you are over 70 and in good health, you might qualify for a fully underwritten term policy. Yes, the premiums are high, but the coverage is cheaper per dollar than final expense. For example, a 70-year-old male non-smoker in excellent health might qualify for a 10-year term policy of $100,000 for about $250 per month. That is $3,000 per year. Over 10 years, that is $30,000 in premiums for $100,000 of coverage. That is a much better value than final expense, which would cost about $6,000 per year for the same death benefit. But you have to be healthy enough to pass the medical exam. That is the catch. So what should a senior over 70 actually do? Step 1. Determine why you need life insurance. Is it to cover funeral expenses? Is it to leave a small legacy for grandchildren? Is it to pay off debt? Is it to replace income for a dependent spouse? Your reason determines the type and amount of coverage you need. If you just need funeral coverage, $10,000 to $15,000 is usually enough. If you want to leave a legacy, $25,000 to $50,000 is reasonable. If you have a dependent spouse who relies on your pension or Social Security, you might need more. Step 2. Shop around. Do not buy the first policy you are offered. Get quotes from at least 3 companies. Compare premiums, death benefits, and waiting periods. For final expense, look at companies like Mutual of Omaha, Aetna, and Gerber. For guaranteed issue, avoid it if possible. For simplified issue, look at Colonial Penn and AIG. Step 3. Consider self-insuring. If you have savings, you might not need life insurance at all. Prepay your funeral. Set aside $10,000 in a separate account. That money will be there regardless of when you die, with no premiums, no waiting periods, no denials. That is often the best option for seniors with modest assets. Step 4. If you have a spouse or children who depend on your income, consider a small term policy. But be realistic. At age 70, the premiums are high. You may be better off saving the money. Now let me talk about the UK and Canada. In the UK, over 50s life insurance is a common product. It is similar to final expense. A 70-year-old might pay £20 to £40 per month for a £5,000 to £10,000 policy. Guaranteed acceptance policies have a 2-year waiting period. The same advice applies. Compare quotes. Consider self-insuring. In Canada, guaranteed acceptance life insurance for seniors is also available. A 70-year-old non-smoker might pay 50 to 70 Canadian dollars per month for $10,000 of coverage. The waiting period is typically 2 years. Avoid these if you can qualify for simplified issue. Let me give you a real-world example of a good purchase. A 72-year-old woman in Florida was in good health. She wanted a $10,000 policy to cover her funeral so her children would not have to pay. She qualified for a simplified issue final expense policy from Mutual of Omaha for $55 per month. She paid the premiums for 12 years and died at 84. Her children received $10,000 tax-free. She paid about $7,900 in total premiums. That is a reasonable cost for peace of mind. Now let me give you an example of a bad purchase. A 75-year-old man in Texas had diabetes and heart disease. He could not qualify for simplified issue. He bought a guaranteed issue policy for $15,000 at $180 per month. He died 18 months later. His family received only a refund of his premiums,